maybe you guys can just come on and introduce yourselves, and we'll have a chat.
Should we sit where our faces are? What do you think?
We tried that, but I don't think it works with the film
Oh, it
setup.
doesn't. Okay, all right.
So this is not, I'm Justin, that's not Justin, but. So as Monica said, I work at XPRIZE managing our strategic partnerships and impact team. And I'm very excited to be here with my two panelists. Maybe we go to the left.
Sure. Hi, everyone. My name is Ash Kaluarachi. I run a company called StartEd. I'll tell you about that in a second. I also produce a conference, industry conference called EdTech Week. That's October 2nd to the 4th. Just one person came. Thank you. October 2nd to the 4th this year in New York. StartEd was something I founded because I spend a lot of time, probably too much, running EdTech accelerators. If anyone's unfamiliar with the term, it's where one would invest in a young company and provide the mentorship they would need to increase their potency, their valuation, and their prominence. I've probably run the most of them, including companies like Techstars and NYU and Intel, and StartEd is something I founded to try to scale that model, try to provide the mentorship and guidance early stage startups need to grow. If companies were children, I'm the kindergarten teacher of building EdTech companies to Rohan's college professor, I'd say.
I love that backdrop. There we go. Can you guys hear me okay? There we go. Thank you for that, Ash. So my name is Rowan. I am a principal and founding member of Lumos Capital Group. We are an investment firm focused exclusively on education, future of work, workforce development. We're backing companies that are above 10 million or so in revenue, and we're writing checks in the $10 to $30 million scale. We're proud attendees of StartEd Week every year, and so now know Ash pretty well. And really excited to have read and learned a little bit more about the companies here, and excited to have this conversation with you all.
Thanks, Rohan and Ash. So we have a few questions, and then maybe if we have time at the end, we can open it up to the audience. The first question is, what are the two of you excited about as the EdTech market continues to grow?
I'll kick that off. It's a very interesting and exciting time. I'd say probably the most interesting and exciting time it's been for a long while in education. Just to set the backdrop as well, we saw investment get up to an insane $20 billion in the pandemic, and it was certainly fueled by it, and then dropped back down about 50%, down to 10 billion last year. That said, if you kind of follow the trend line from 2019, 10 billion is probably where it was heading anyway. But interestingly, there were fewer deals done, so now investors are getting smarter and making fewer investments, but still increasing that overall investment. Now, EdTech is now, I think, a thing, and has been shone a spotlight. I think the exciting parts of it are that the traditional silos in the space are completely dissolving. K-12 students are finding a path directly into careers. The post-secondary space is starting to play a completely different role than it did in previous years. There's different kinds of exciting technology like Web3 and AI and VR that are being used in intelligent ways and then superfluous ways as well. I think amongst all of these things, there are some intelligent ways and founders that we'll hear about in a bit that are doing extraordinary things.
Yeah, I think what I would add to that, I wouldn't underestimate the power of sort of entrepreneurs being successful and that snowballing into more innovation, more people being excited about the sector. And I think we're starting to see that a little bit, not even underscored from the teams and the entrepreneurs here in this room. I think folks look at those successes and it motivates them to want to build a company in EdTech or workforce development. So I'm excited for that snowball to continue turning. Other things I'm interested in, I think EdTech is starting to reach a scale where it's starting to justify even more verticalization. And I think, to give you an example, we'll invest in a company and often we'll thereafter look for banks to help support with lines of credit. And I'm always a bit frustrated because I feel like it would be so much better if there were more impact-oriented banks, or if there were EdTech workforce development-oriented banks that can underwrite based on other aspects. But I can understand their business model to not focus on it because the scale of that is not yet justified. But I'm excited for that to happen. We see that happening in other sectors, whether it's healthcare or others. So I think that will only make our segment that much better. And recently in the past 2 years, it's also been healthy to see more public companies in this EdTech workforce development space. I think that's helping inform the whole ecosystem as to what do these companies trade for? What is that? How should that inform how investors all the way down from early stage to late stage think about pricing and valuing these companies? I think that would be healthy for our ecosystem overall. Whereas if you rewind even like 6, 7 years ago, there weren't really that many public companies in the types of business models that we're talking about throughout today.
To build on what Rohan just said, and specifically focus on workforce and reskilling, brands like Google and Walmart, sponsor of today's program, Amazon, are putting significant dollars into training their own workforce, which is unprecedented. One would think it was natural for a large company to do that, but this is the first few years we're actually seeing that happening. And then companies like Walmart going that essential step even further and focusing that energy on dovetailing with their DEI, diversity, equity, and inclusion initiatives. So that's exciting to see that non-traditional talent finally getting a pathway.
And interesting to think about those positive feedback loops and the innovation in the business models, not just the technological innovation as well. I'm curious for the teams participating in this a competition that are looking to expand and grow, what, from your points of view, can they do to make themselves more attractive to funders?
I can start if you want. We could take turns, Ash, if you like. Ash will be better positioned even to answer this question. He's very well versed on early stage companies. I would say some thoughts that I would offer is first, as a company at this stage, a lot of it is predicated on product, market, and people. I think just understanding those three is really important, and being honest with yourself on where do you want to lean into when you're going to a funder. For example, if you're very strong on your product or you feel like that is the shining star, starting off with a demo or making sure that demo is seen by the funder would be advisable. I think other aspects more procedurally, it might sound ironic, but it's best to fundraise or look for funding when you don't need it. If anything, I think maybe it's perverse, but I think investors and funders like to see that there's optionality on the other side of the table, and that gives you a level of leverage in the conversation. The last thing maybe I'll add, as you're thinking about funders, that I'll often see when I'm talking to companies is there's an ability to sort of ask, what is the question behind the question? As you're going through these conversations, you might have someone ask, hey, what do you see as satisfaction of the students or the folks going through your skilling program? Perhaps the question behind the question that they're asking is an assessment of quality of the program. And so you may not have the answer to, hey, what is satisfaction? But in reality, what they're really asking for is product quality. And so you might be able to craft the narrative differently and say, hey, we think our product is extremely high quality because these are our graduation rates, these are the salaries that we're seeing after the program. And so what I see a lot from very experienced folks going through this is asking themselves, hey, why are you asking that question? What's the question behind this question? And then it allows you to craft the narrative to your strengths.
I agree with everything Ron just said, and I want to maybe add some notes to guide an entrepreneur's behavior in this specific moment in time we are all in. But before that, I want to say it's important to understand the definitions of various kinds of funders. All investors are not equal pots of gold, if you will. They come with their own motivations and incentives. So understanding what incentivizes a venture capitalist from a foundation to a loan provider to newer age type funders that are starting to emerge is really important. We had started track actually 17 different kinds of dilutive and non-dilutive funding when we tend to tell the narrative mostly about traditional investment. Just to talk about what to say in this moment in time to attract the right funders, I'll mirror what Rohan said about what investors like to see at this moment in time. There's a lot of talk about the coming drought, the coming recession, and using that narrative to plan and figure out and have a narrative about how you plan to survive it, how you plan to cut your costs and outlast what happens, is a great way to impress a funder and ironically get the funding you need now. And the companies that are forged in this coming drought will be forged in steel because they would have built their solutions and validated what they're building in very adverse circumstances.
Thank you both. And as you noted, you work with companies at different stages of maturity and development. What are some things that the teams here emerging from rapid rescaling should be thinking about as they succeed in getting funding? Things to be aware of, and maybe some common pitfalls to avoid, or any thoughts on that?
The receiving funding isn't the finish line. Now, once you receive funding, you now have a whole bunch of other problems, right? Because now you're not just answering to yourself, you're also answering to the needs and desires and visions of a bunch of other really smart, well-funded folks. So managing that herd of cats is now on your plate, right? So figuring out a system to do so, to communicate, to show what your vision and how to lead that strong group is a smart thing to have a plan around. The second is to actually do that communication. You'd be surprised. I've been involved in many investments over time, and you'd be surprised how few companies let their investors know in a consistent way how they're doing. I know company building takes a lot of effort and time, and some founders even suppose, oh, investors are super busy, they don't really care about this one company that I'm doing. Trust me, they care. And it's not just nice, but it's also a good business practice to let those who you know help you and communicate each quarter and make a simple ask of them, and doing that in a consistent way is a smart thing for entrepreneurs to build into the habits that they need to build large organizations.
Yeah, I think that's great. I mean, maybe building off the communication point, we like to tell our founders, start with the ugly. Like, it's okay, and like share often, share the bad news first, and we're okay with that. And I think you can set the tone right after you get investment on how you'd like that dialogue and transparency to play out. Other things that we see, post-investment, I mean, I think it's important, from the early days, there's a motivation once you get funding to experiment. And I think that's well welcomed from the investor. That's why they're funding you, to sort of think about different channels or double down on what you think is growing. What we see sometimes is, hey, do we know what success looks like after you've invested in it? So like, what is your definition for success on, is selling to X type of customer working? And I think what we see often is, okay, we're going to use this capital, the use of the proceeds or the use of the funding will be to hire for X. And what we don't have is like that one extra step afterwards is, we'll know this is working because of Y. And what we'll find ourselves sometimes is 6 months, 9 months, 12 months later saying, oh, did it work? Well, we didn't really know how to measure if it works or not up front. And so I think that's something we're trying to encourage more often, particularly in this moment, is define success, define the milestones, before you start allocating the investment.
And if you can't, and there's some bad news to share, share it well. Some of the most successful founders I know are that because they know how to tell bad news well, and they'll do that in a consistent manner. A very successful founder that both you and I know his usual practice is he'll have an investor sign on the dotted line, and then he'll send them a single slide with the title, "Here's why you should not have invested." It's a really good, strong practice to let your investors know, hey, these are the risks. I mean, they should have covered it in their diligence, but communicating that and then bringing the investor on the same page, it's a genius tactic.
Yeah, thinking about setting a target and communicating your progress towards it, it kind of reminds me of the Mike Tyson quote of, everybody has a plan until they get punched in the face. And some of as you move on that journey, the landscape changes. You mentioned that we're looking ahead towards potentially a recession, and we're coming out of a pandemic. So a funny window of time for this prize to be wrapping up and occurring. I'm curious, either looking back and kind of reflecting on the pandemic or looking ahead and thinking about the challenges on the horizon. Thoughts on how to navigate and incorporate kind of forward-looking into your business planning, or also maybe any insights into how you saw the landscape change after the pandemic?
Yeah, so I think our sector went through a similar pattern as what we saw across other sectors, where there was a level of exuberance that was flooded in post or during the pandemic, with rates going down, a lot of capital flooding in, and so we saw that play out in terms of companies and the ecosystem. Obviously, there's been a bit of a pullback as rates have been rising. What's unique about our segment in some ways is I do feel like the pandemic, though maybe not as in as high of a scale as what was talked about in the media, did feel like it went through a bit of its sort of Berlin Wall moment in certain segments, where you sort of felt, for example, whether it's social emotional learning, not only in the K-12 context, but in the higher ed context, other things. That, pre-pandemic, I think people knew that that was an underlying issue. It was there. There was always questions of like, hey, is that the top of the priority list? And I think as the pandemic is making its way through, and hopefully in the last innings, I think people are waking up to how big of a problem it is. And maybe unfortunately, I don't know if they would have as much if there wasn't the pandemic. And I think it's the same for decision makers. It's hard to remember, but even 3 years ago, decision makers were not talking about the best tech to use at their university or at their institution. Now decision makers, particularly in 2020, 2021, needed to have an answer to that question. And I think that is different than other sectors, and I think we're seeing that play out, and definitely we're trying to identify the certain subsegments that are seeing that. Now, what do we find ourselves in today? We find ourselves in today benefiting from that Berlin Wall moment being in the past, and I think that is important to recognize and hopefully feels optimistic, but also pairing it with, there's a mindset of being very mindful towards profitability, managing cash, having runway, and it's balancing those two right now. But I would say it's one of the best times to be an entrepreneur. I think this is a really exciting time. You've had certain obstacles that have been with us for decades start to drop. The opportunity cost is lower given what else is out there, and it's a good time to be building.
Oh, completely. It's actually, the definition of entrepreneur is changing pretty rapidly, right? The definition is expanding. We have 100 million creators in the world. One would argue that they're a startup of one, because their business models are very varied. They have multiple different revenue streams for what seems to be just a social media business, right? But they have different types of ways that they are selling their networks and what they know. The universities that we're seeing the largest number of acceptances and applications at, like Western Governors, like the University of Southern New Hampshire, they tend to be universities that are seen as, oh, those are universities where working parents and folks later in their careers go to. Increasingly, we're seeing traditional age college students taking courses at those universities, virtually and otherwise. But their studying is actually how to create their own companies and how to use technology to solve problems the way they see it. These shifts in how entrepreneur is defined in creating small businesses or scalable ones is really going to change what should be taught.
Yeah, that's interesting. And thinking about applying some of that in a global context versus a U.S. context, how do you see that? Or thoughts on how the innovators in this space should approach global business versus U.S. business, and does that different context change what you'd be thinking about and looking at from a funding point of view?
Yeah, I think it's an interesting question, like the international versus domestic one. I do think borders are easing in terms of capital flows. I think doing business across borders is becoming easier. We're a global firm. We'll invest across the globe. I think it's interesting to also just take lessons from other geographies and then adapt it to your own. You know, there was a good conversation around apprenticeships in the prior panel. I think there's a lot to learn from like UK and others, and you know, even what we've done here in the US over the years. And so I think we really like that. Like, I think there's a lot of inspiration to take from other models and to apply in other countries. That you know, the world is becoming flatter, but it's not necessarily ubiquitous, if that makes sense. So it's sort of that dichotomy to live through.
Working in international business is also a little bit like time travel. We tend to be very privileged here in the US, where practices tend to be on the cutting edge, but I just spent a couple of months in Australia, and it feels like, you know, the late 80s and 90s in terms of how business is done. I mean, a lot of people are still wearing jean shorts as well, so that helps the analogy, but it really feels like, wait a minute, I knew a few things about what's about to happen in Australia, right? So, you know, observing what you are aware of and what you know about is going to happen by observing what has happened in the US. It's just a smart way to figure out where the opportunities might be and the low-hanging fruit might be for you, if the US market might not be the right time.
Thank you. Thinking, this is maybe the last question, I think, and then maybe we could take a couple from the audience. As the teams emerging from rapid reskilling kind of plan to secure funding, grow and scale, what are some of the partnerships or strategic alliances that they should be thinking about forming to make them more successful?
Yeah, I think that's another good question. I mean, I think, you know, maybe two angles that I'm applying the investor lens on it for as you guys are looking at building your companies. One is on the acquisition side, sort of like how you are, and I say acquisition a little bit more raw, but how are you bringing in more learners or trainees or those who are to be skilled? And you know, we as a philosophy, for example, generally are looking for companies that have a differentiated method to acquire students or acquire learners. You know, a company that maybe is relying on, let's say, Facebook ads to acquire 80% of their students, you know, we're a bit wary of, because what is the potential trend line of that cost at Facebook? Well, it's going to go one direction, which is more expensive. And so finding partnerships or alliances that allow you to have you know, a more nuanced story or a different story on how you would attract learners is attractive to us as an investor. And we see that as something that we put a premium on. I would say on the other side as well, in terms of customers, let's say you're working for you know, certain corporates or others, I think particularly at this point in time, there was a lot of one-time funding that came through over the past few years. I'll maybe make the comment more broadly is we're also looking at the stability of the funding sources of your customers. And so that's also where I think partnerships are really interesting. You know, it's a very, you know, relevant, you know, pocket for today's audience, but like the WIOA funding, that's a very reliable set of funding. There's a lot of reliable parties who have been around, who are collaborative. And so, you know, we have companies that we've invested in that, you know, work collaboratively with workforce development boards. And so that's an example of a very, let's call it sustainable, you know, set of funding streams, contrary to, let's say, you know, a one-time funding stream that came in 2021 or 2022. And I think in this sort of skilling, you know, ecosystem, there is a lot of, you know, one-time funding or less recurring funding. So I would say those are two areas where strategic alliances and partnerships can add significant value from the eyes of an investor in acquiring your student base and showing predictability in your customer base.
Yeah, I mean, we had some great examples from companies that are large that are doing that in an intelligent way. 2U partnering with edX to figure out how to get to more students, and the ones that they couldn't get to directly before. There's, I think, multiple examples from the XPRIZE cohort establishing great relationships with strategic partners, the work that Kumal and Isotonic are doing, the work that Vital's doing. I'd say over the strategic alliances, I'd like to speak to maybe the community aspect even more so, because StartEd is a community-based business, right? A conference is about creating community and gathering. And those types of businesses and those types of networks tend to be essential for a couple of different reasons. One, if you as an entrepreneur or innovator don't have someone you can call at 4 a.m. when things seem really bleak, it's unlikely you're going to survive that night from a business perspective. But being able to call that person who can identify and empathize, maybe who's 6 months, 12 months ahead of you, maybe have been there, done that before, and can explain that, look, there's no problem at 4 a.m. that at 7 a.m. after 3 hours of sleep in the light of day doesn't look better, and more solutions can be created. So protecting the downside of entrepreneurship is mediated by community. And then, of course, there's the upside of being able to create a community of folks who are understanding what you are doing. This is a core skill that most founders don't realize that they have, but if you can succinctly explain yourself in a way that the person they're communicating with, the next time they're at a cocktail party, the next time that founder isn't in the room and someone says, I have this problem, I just really need a solution for it. You need to evangelize that person to be able to say, oh yeah, there's this company that's doing exactly that. Let me give you an introduction. That's how community becomes really powerful, to get you to do your work and evangelize your work when you're not in the room.
Thank you both. And maybe Ash, in the spirit of that thought of community, we'll take a couple of questions from the crowd here if we have any. Any questions? I think we have you have to switch it on.
My question, she has waiting for her. If there was a company or organization that's looking for funders, what are the things they should have in place to look desirable to someone who's looking to fund?
Yeah, I think it's a great question. So I think there's, I'll go back to, maybe it's an oversimplified framework, but having an articulation of your offering as it relates to people market product. So like, what is your product? What is the market you're serving? And can you demonstrate your level of cohesion and experience to be able to solve that problem? Now, how does that translate? Like very tactically, there's certain elements of data, whether that's like a narrative painting on how your company has been built, what your vision is for the future. There are data and information you can provide to show product quality, the sustainability and size of the market, and that you're delivering the right outcomes. And how that takes shapes, I'm deliberately being a bit fluid, because what I actually probably want to encourage the most is you have the opportunity as an entrepreneur to paint the narrative. And it's more important to figure out what are the funders trying to solve for versus what is the data they're seeking. And so they're trying to solve for, hey, is the market big? Is the market one that you can win in? They're not necessarily asking you like, hey, what is the market size? You can paint that picture yourself. And so I think that was what I would encourage, is try and figure out what are the questions they're going to try and solve, and how does my business and model best fit with that?
EdTech and workforce learning founders also have a secret weapon that most other entrepreneurs don't. And that's the idea that we're not just here to make money. Right? We are genuinely here to create some kind of social impact, create some non-financial outcomes that make the world better. You wouldn't be sitting in this room and we wouldn't be building in this space if you only cared about that other thing. So lean into that. I understand that funders are human beings too. They're trying to create these social outcomes that we need to care about. And figure out how your business, when it is successful, is creating that outcome that they want to see. Paint that picture of what the world could be like, and then put some numbers behind it.
I think we have time for one more question if anyone has one. I think you have one in the back.
In Houston, we ran a program that I helped to develop called English at Work. And we took it to hotels and restaurants. And while it was federally funded and grant funded and that kind of thing, everyone was, yes, we're in. And then when that funding dried up, all of a sudden it was not to be found. The budgets were short. What did we miss? How could we pitch in that situation to recapture an investment value, to really get to those decision makers who would go, yes, you did a good job and we will invest?
I'm not going to focus on the pitch because I'm not aware of the pitch or the problem space specifically, but I doubt it's actually about the pitch. I'm pretty confident you did an amazing job at that. What I suspect you may not have realized is that any initial funding, especially in our world in investment, is it's a window in time, right? They're granting you an opportunity where there's less risk and a few more resources, where you need to figure out how do you make that boat float on its own, right? So the common vernacular is how do you create a sustainable business model? And that requires understanding who will pay for what, right? And the interesting part in EdTech is that it's not as simple as selling a widget to a person who wants to purchase it. The complex ecosystem we work in, there's often a third party who wants to make sure that the interaction between yourself and the provider and the users who are receiving it has to occur. They benefit in some formally unknown way to you, but if you understand the stakeholders who are in the peripheries around you, there are people and there are organizations that I guarantee want to make sure that interaction happen. That stakeholder mapping exercise is something we try to get founders to do early and then track as the market changes.
Yeah, the only thing I think that was spot on. The only thing I'll add is, as you're going through, and we ask these questions as investors, you're almost trying to ask the question, would this counterparty be okay if we were not here? And you're trying to make it really hard for them to answer, yes, we'd be okay if they're not here. And not in a a very competitive way. It's just you're delivering real value and you're that ingrained when it's hard for them to then go away from it. And that, we'll look at proxies like engagement and like those things. So particularly when you have a pilot project or you're grant funded, it's that the bar is that much higher, but you need to push yourself to then ask yourself, hey, well, will they be okay if we leave? And ideally, you're delivering so much that it would be hard for them to be okay after that.
Yeah, thank you both. I think we're at time. Do either of you have any closing thoughts? No? Good, great, thank you.